What's up, everybody? Michael Silva here to do some technical analysis on the financial markets. In today's video, we will be looking at the S&P 500 sectors. We're going to be looking at the SPX, the Russell 2000, the Dow Jones, and the Nasdaq 100. I am also going to be talking about some opportunities that I see brewing in a specific sector. Lately it's been utilities, but we're kind of reaching that top of the range there where it's becoming overbought, so we might be seeing a pullback in utilities here soon. But now I'm looking at another sector that might be presenting some really good opportunities in the near future. Let's get into it. All right, welcome back. What we're looking at right now is the S&P 500 sector overview. So as you can see, we have the S&P 500 index up 1.64% today. Big move in really all the indices. But what was this really driven by? Well, you can see down here, you see the technology sector is up 2.73%. That was really led by Apple, up 6.35% today. This could be because of the anticipation going into the new product launch. We have an event coming tomorrow, so it could be just a lot of hype going into that stock. Now, the utilities sector, pretty much everything across the board other than materials has up. So utilities was only up 0.63%. I've been trading in the utilities sector because I'm kind of looking for not the really high risk stocks. This is more of a risk off style approach, but I get to see the kind of draft moving higher and higher as the other stocks typically perform a little bit better. It's just a safe way of investing, and that's kind of what I've been doing. Let's go ahead and look at the S&P 500 index, do some technical analysis that on the indices, and then we'll hop into the kind of opportunity that I'm currently seeing. So first thing is first, let's start here on the daily time frame for the S&P 500. We were mapping out this inverse head and shoulders. We said it was also a rising wedge. It's still kind of technically can be within that kind of rising wedge pattern. But what do we got going on here? Let's think about the kind of psychology of what's taking place here. So we had a big gap up, which we have been having pretty big gap ups. We're now at our fifth gap up within the last week and a half or so of trading, and then just a big push higher. Now, where's the price action? The price action is extended past the Bollinger Band, the upper Bollinger Band, and we've been extended from the 5 EMA, which is typically tagged very frequently here. The RSI indicator is at 64, very strong, but it is kind of heading into that 70 range, which will be considered overbought. When things are overbought, you can typically see some sort of a pullback take place. When it got back overbought over here, you can see it took a while, but then we saw that pullback. Same thing over here in June. So what's kind of going on here with the psychology of this current pattern? Well, an inverse head and shoulders is a bullish pattern. When we broke above, you got to understand, if there were people that were shorting the market at this particular point in time, right here would be a good place, which we discussed, to cover that position, to have your stop losses there. So you have one, trend follow buyers. So you have people buying the breakout, and then two, you have short coverage taking place, which really just pushes a stock higher. That is known as a short squeeze, and that's what you kind of got to think of when you start seeing these big moves to the upside. I've got a lot of messages saying, what's going on today? Well, what's going on is people are covering, and people are also buying a lot more calls, and they're kind of just trading into this momentum. Now, this could be one heck of a trap taking place, because when I look at this and we go into the other indexes, what you'll see is that we're moving into oversold territory in a bunch of these different indices, and we're overextended, in quite a bit of different aspects, and I'll show you on some other indicators. So the S&P 500 right now, more risk than there is reward when you think about going long at this particular point in time. Can we squeeze higher? Absolutely, we can go higher. We have some overhead resistance at 33.50 to about 35.75. We can get over that. However, when you get these overextended moves, when you get these squeezes, sometimes your contractions could be just as powerful. As you can see, we were squeezed from right around this range. Boom, we moved up fast. And then you can see that it took the stairs up and then the elevator down. So the moves down could be very aggressive as well. Let's just go look at the VIX to see if it tells us anything that might be underlying. So here is the VIX on the daily time frame, inverse head and shoulders. still far away from the neckline. We have a hammer candle that formed. Technically, we were up today, as well as up in the S&P 500. Just interesting kind of what is kind of just taking place in the VIX. We're still technically within this pattern. It has been in a tight trading range, kind of broke below the 50 period, which makes me think that, hey, we can potentially draft a little bit lower. But with the aggressive move that we're seeing in the S&P 500 and the other indices, it's very possible that we might be getting a move higher here in the near future on the VIX and other different volatility measures. So we're going to be tracking this one as time continues. I still think that the neckline is right here at about 37.5. And if we do start breaking up and moving higher, I mean, volatility can pick up very fast. As you can see back here previously, in just a few days, we went from, mid 23-ish range right here all the way up to 42 within the matter of just a couple of days. So when volatility picks up, you got to be ready for it. Here is the S&P 500 on the 2-hour time frame, and really what I want to point out here is that we are in this overbought territory, and we have all of these gaps hanging down below us. 1, 2, 3, 4 gaps. Oh, 5. Sorry, I missed this little tiny one down here. So we're moving into overbought territory. We're extended from the 5 EMA. This is just kind of a recipe, just saying like, we're going to get a pullback. It's going to come. It can't get too overextended without seeing some sort of a contraction take place. So what I am doing is still, I'm a risk-off investor at this particular point in time. Even on this big squeeze up, I look for now pullbacks to certain areas. And if I were to short the market, I'm looking for very, very specific major areas of resistance that I can short into. However, right now, right at this particular point in time, I'm just waiting for the pullbacks, and then I'm getting into a sector that is performing. It's just a very simple way of investing, and it's been quite profitable so far. So if we start getting pulled back tomorrow, which is very likely, tomorrow's Tuesday, could be turnaround Tuesday, keep an eye on this gap. We can come down to fill it at about 3490 to 3500, that kind of zone here, this gray box. So we could potentially pull back and then bounce from that point. We could head lower, but that would offer up a good risk versus reward trade there in the S&P 500. Let's go ahead and look at the Russell 2000. The Russell 2000 we're looking at on the daily time frame, and this index looks like one that is ready to be shorted, in my personal opinion. We're running into the previous all-time market high. Quite a few market briefs ago, we talked about looks like an opportunity to potentially reach the all-time market high. Then we had a little bit of a down pull, and then now we're really seeing that move higher. What's going on in the markets right now? Well, in my personal opinion, I think that the market is pricing in the possibilities of a stimulus package coming in. I think that that's being priced into the market. So if it doesn't come, we're going to see a really big pullback, and if it does come, I still think it's going to be a sell the news type event because it's currently being priced in at these levels, in my opinion. Now, the Russell 2000 is moving back into overbought territory. It's at 70.53. When it reaches those areas, you can see pullbacks take place. Boom, right here, boom. So boom, right here, a little bit of a pullback and then an extreme pullback. That was the March crash there. So we're moving back into that high end of the range or the high end of the zone here on the RSI. It looks like a pullback to 150 or 159, 160, 158. That range, this blue horizontal line, would make quite a bit of sense to me in the short term. On the 2-hour time frame, you can see the negative divergence here on the RSI, and then we had this box mapped out saying that could be the zone that we can get pulled back into. The MACD crossed over, that's a bearish crossover. It's still above zero. So this is just, in my opinion, this looks very toppy. We can go higher, but it's not a good risk versus reward to go long at this particular point in time. It's a better risk versus reward to go short here at this particular point in time. Now, if you're trading options, you need to look at implied volatility. You need to look at certain advanced strategies that you can benefit from moving lower. This is not just one of those, hey, I'm going to buy a put and then potentially, get burned away by theta if it goes a little bit higher. So be careful with options, but in the overall view via technical analysis, this looks toppy. This looks like it can head lower very soon. Here is the Dow Jones. All these indices charts, they look very similar. We had an inverse head and shoulders. We broke above and we're squeezing higher. We're cleared over the 5 EMA and we're extended into the upper Bollinger Band. This is an overextended move. overextended moves, they can hold overextended for quite a period of time. I don't know if I've already mentioned that, but you can stay overextended for a long period of time, but you keep in mind that we're running into a previous all-time record high. So there's resistance there, and then you have the confluence of being overextended to 5 EMA and the upper Bollinger Band. Then you match in with the RSI coming into overbought territory. It's a recipe for some sort of a pullback in the near future. So right now, risk off is kind of the measure and has been the measure for me, particularly in my trading style. Here is the Nasdaq 100 on the daily time frame. Once again, I'm showing the inverse head and shoulders. I'm showing you this big gap up, this gray box, and how far overextended from the 5 EMA we actually are. Then you look at the RSI, we're moving into overbought territory. This was a huge move for the Nasdaq 100, up 362 points. That's 3% in a single day. This right here is going to bring in a lot of attention going into tomorrow and the rest of the week, where we see these big aggressive moves. People are going to get excited, people are going to buy, they're going to go continue to go long. And then on the flip side of that, hedge funds are probably looking at this and saying, hey, we're getting toppy, getting overextended. Right now, we need to wait for a pullback, because the fact is we don't have stimulus. We might not get stimulus, but everything is being priced in as if we're getting it for sure. So this is a very, very, be careful type of time here in the markets, especially during the seasonality, September, October we're in right now, and the presidential election. So just so many outside variables that can take place to really send this market lower. But if you're buying the pullbacks and you're focusing on, performing sectors or risk off sectors, which I will talk about more, you can catch the upside potential. And I said it before, it's like you're a cyclist, and certain cyclists, they go within what's called the peloton, and then they kind of draft together and they move together so they can use less energy, but yet they get to still proceed forward. So that's like my investment strategy. I'm just the guy behind the other couple people, which are the high performing stocks. I'm not risking and using all my energy going into that. I'm kind of drafting behind and catching some gains to the upside. And then if the market does decide to whip back around really quick, well, the people that are holding the bag are the ones that get hurt, and I am just kind of there, just taking off just a little bit, shaving my portfolio a little bit off, and or just getting stomped out fairly quickly. So I'm looking for high probability setups in certain sectors. And now what I want to talk about is the XLU, which is the utility sector. Actually, before we do that, let me go ahead and show you a couple of the indicators that make me think that why this market could be getting overextended as well. The first one I want to cover is the NYMO. This is the McClellan Oscillator. This is a very well-known indicator, and what we're seeing here is, we're seeing a big move up on a nice big positive breath. That to me makes sense. However, you got to understand the force from the low, from low 80 to all the way to a high of almost 70 in a very short period of time. Those aggressive moves, if they can hold up in that area, that is bullish. But if we see the sharp V move to the downside, that is very bearish for the markets. And what we saw in 2018 happened very similarly. We reached an all-time market high on a negative breath, and then we saw a very sharp spike to the upside in the NYMO. It brought the market higher, but then it declined fairly quickly. So what we're seeing here is very similar to what happened in 2018. And it's possible that we can see that happen again. Now, if the NYMO can hold at these levels, that is more bullish of a trend. So we got to kind of monitor that. Now, there's one other indicator that we've been talking about, and that is the quote-unquote sell signal, the CPC, smoothed over 10-period moving average. Here is the CPC, CBOE, total put to call ratio. Now, usually this is a very spiky, fast-moving indicator. So what we did was we smoothed it over a 10 period of time. We mapped out certain levels that can indicate to us, hey, this is a time that you should be warned, like a warning, and then this is the sell signal. And by sell signal, I don't mean go buy puts, okay? That's not what I mean. It depends on your strategy at least, so maybe that's what it means to you. But to me, what that means is increase my stop losses, or start taking profits on my long positions, or start hedging my long positions. It's just, be more careful when it crosses these certain levels. Now, what we're seeing take place right now is it's crossing below 0.8. It's actually at 0.8 right now. That indicates to me the warning signal. That says to me that everybody is extremely bullish on this move, and we're seeing the market down here start to move higher very rapidly. So the bulls are coming in, and this could be used as a contrarian indicator. When everyone's way too bullish, that means that's the time to probably pump the brakes, and you should be a little bit bearish or very, very kind of like hesitant on going long. That's not necessarily the sell signal, that's the warning signal. When it crosses back above or starts moving higher, that is the sell signal. So you can see here when we cross below it, that was the warning, and then when we cross back above it, that was the sell signal. If you just look right below this, then you saw from this point it moved lower, and yeah, it doesn't look dramatic, which it doesn't mean that it's going to be dramatic, but it's just kind of like telling you, hey, you know, take some profits, move your stop loss up, and then guess what? It came from, you know, this level and down to here, which is a fairly aggressive move to the downside. And then we were warned here, and then we moved right up here at this particular point in time. And yeah, you can say, oh, well, it reached all the way up here and then it moved all the way down here. True, but guess what? That's why we have price action, and that's why we have volume, and that's why we have other indicators that help us see this. This all right here, this is not an end-all be-all indicator. But if you were like me back in September, we knew that this market was overextended and it looked like it was going to be pulling back. So we didn't need this indicator to tell us that. What it's telling us right now is the market is showing us some strength. It's not at an all-time high, and this sell signal is coming back into the warning. So it's here. If we start moving back up, that could be technically the sell signal. And when we looked at all the other indices, what do you know? They're moving into overbought territory. This is all lining up. It's all making sense. Can we move higher? Yeah, we can, but it's going to be, it's like if you stretch a rubber band again, okay? I say that a lot. How far can you stretch it until it snaps, right? Typically, the rubber band doesn't snap in this case in the markets. It just stretches and then it contracts. Okay, it never just snaps completely. And if it does, that would be one heck of a short squeeze up to the freaking moon, which would still eventually contract. So I hope you get my point there, but you can only extend it so far from all these indicators until there's some sort of a contraction. That's just how it works. That's how it's always worked. Can it go higher? Obviously, but you're obviously going to have increased volatility and you're going to see moves to the downside. So we need to prepare ourselves for those moves when they take place so we can make sure that we keep our profits in our pockets. Oh, that's cool. Profits in our pockets. I like that. Now we're going to start talking about the sector that I'm pretty interested in. And the sector that I'm pretty interested in, I'm looking at is XLE, and that is the energy sector. And typically when you see oil increase, that's a good sign for energy stocks, oil stocks, etc. And really, I want to just point out a chart of WTIC. Now, it's not getting set up at this particular point in time, so I'm not saying go buy into these stocks right now, but there are some signals kind of pointing, hey, no, this sector might start performing. It's been getting hammered completely. The worst performing sector in the last 3 months, but in the last 5 days, it's the top performing sector. So keep that in mind. But here's WTIC. This is light crude oil. Positive divergence here on the RSI. That means, hey, the market's building in strength. But if you look down, it kind of had this double bottom at the low risk portion of this range. So really what this is, it's a zone that I put together. It's kind of a channel that the price of oil has been trading in since June. It's been bouncing around, came up a little bit, but then came back down, then down, and then now it's kind of heading down again just recently. We're by the 200 period moving average. So really this trend is just completely neutral, but the market has been putting in the RSI has been putting in higher lows, which could be a signal saying, hey, you know, this might be catching some, you know, some legs. We might be seeing oil start to increase here in the very near future. Now, when oil does bad, or when it moves like this, there's certain industries that do good. So airlines could do good, and the transportation index could do good, like the Dow Jones Transports, and I'll show you a chart here. But why is it that they can do good when oil does bad? Well, it's because the price of oil goes down, which is one of their biggest expenses. So transport index, they're using a lot of oil. It's when their expenses go lower, that's good for their companies, it's good for the stocks, it's good for airlines. So here's a chart of the XOI over the Tran. This is Dow Jones Transportation. So we have an oil index over the Dow Jones Transport Index, which means when the line goes down, that means transports are overperforming, probably because oil is heading lower. So what do we got going on? Well, you can see here, we have a new low and a low right here. But on our indicators, we have, looking at the RSI and the MACD, we're putting in higher lows. So those are positive divergences. Now, these can hold for a long time, okay? It's our job when we start seeing strength, it's to go look at the individual stocks that make up these sectors, and then we look for patterns that could potentially be very profitable. So I'm starting to see some market strength. So what I'm going to start doing is looking into that sector, looking into individual stocks to see what kind of setups might be coming or forming in the near future. Because once there's some good basing patterns and there's some good breakouts looking to happen, then that's when I'm going to start posting a lot more of the energy type stocks. Now, you've been seeing me post a lot of utility stocks. However, the utility sector is now moving into an overbought level. Let me show you. Here is the utilities, and this is kind of the zone that I've been monitoring here. You can see that it bounced from this level, it got rejected from this level, so it's been acting as support and resistance kind of within this zone right here. Now we're seeing this big rip up to the upside, which we caught a lot of that because of the stocks that I talked about. And now we're moving into that overbought territory right here. So it's very possible that we can start either one, consolidating or drifting a little bit lower. Doesn't mean a crash, right? It doesn't never means that. But this is kind of where the brakes just might be kind of put on utilities for a little while. So we got to monitor that and find out where we can put our money to make more of it. It's all about finding good opportunities in the markets that are going to be breakout stocks and then having tight stop losses and managing your risk as time continues. Now, there was obviously a positive divergence right here on XLU, so you can see a low here, then a higher low here, and if you look down, boom, it was clearly that was the March crash. But if you were tracking that positive divergence, you could have seen the market run a little bit higher, and that's kind of what I've been showing you with the energy sector. Really quickly, I'll just point out back to the transportation index. This is the Dow Jones Transportation. So obviously oil and energy has been struggling. Well, the transportation index has not been struggling. We made all-time record highs. However, look what I'm seeing right here. I'm seeing a negative divergence in the RSI. So boom, way oversold, making a lower high, and then here in the price action is making a higher high. Last time that happened, I'm tracking, was right here in 2019. You saw a high here to a lower high. You saw right here, and then you saw this big drop from 11,200 down to 9,800. So a big drop, and we're seeing something very similar take place. So it's possible that we start seeing a corrective move and or pullback in the transportation industry. It's very possible. Things are becoming very, very overbought at this particular point in time and overextended. So as I see it, if you're looking for opportunity, it's going to be within certain sectors in the S&P 500. My eyes are on the XLE, which is the energy sector, and I'm going to start seeking out some individual stocks there. If you take a look at like other things like, for example, like lumber right now, lumber has been getting absolutely destroyed. And there is a thing called a lumber to gold ratio that you can track as well. And when lumber goes down, or when it goes down sharply, it's a good kind of sense to what might be taking place in the economy. Here you go. So here is a chart of lumber, just clearly just a huge rocket ship up. And this was in just before September. It met an all-time high, and then it started sinking. Well, as you can see, when we started sinking, well, what was taking place in the S&P 500? The S&P 500 was taking a huge dip as well. Here's the lumber to gold ratio, and this is better to track on a weekly, and it's good to find trends in it. So I'm not getting way too in depth with this whole ratio as of right now, but you can see that obviously when lumber goes down, that means gold's overperforming lumber, and it's kind of just that dynamic on the economy that people are going from risk on to risk off. There's more fear than that there is anything else taking place. So I'll talk about that ratio in more details probably on another episode, but it is still worth noting and talking about as of right now, because we are seeing just this super steep decline after a very steep run up. It's worth noting. All right, so here is the US dollar, and really we cracked below this 93.50, which I was kind of watching. It's a pretty steep move to the downside, and then we kind of been just, today was just a really boring day. It was just an indecision type day. We got rejected by the 50-period moving average. What's going to happen with the dollar? Well, I bet you when the dollar rises, you're going to see gold and silver go down, at least short term. If the dollar continues sinking, you're going to see gold go up, silver go up, and that's just how it works. That's a current correlation that's taking place. Overall, this is just kind of a neutral pattern taking place in the dollar. It's not bearish short term. It's not bearish in the short term trend, and it's not really bullish at this particular point in time. Yeah, we had the breakout, but now we're just tracking sideways. But since August, we've really just been going completely sideways from here to there, just moving sideways. This is still a basing pattern. It hasn't been broken. If we start cracking below 92, then it's looking pretty weak for me. And, we'll kind of just analyze the markets from that point. And then if we break above 95, that's going to be a good sign for the dollar. We can definitely get squeezed a lot higher, which you got to be careful on the miners. If you're trading miners, that could put a lot of pressure on that sector. Here is a chart of gold. Just the other day, really had just one nice rally and break above this trend line. I still don't believe this as a breakout at this particular point in time. It looks good, but it's still below the 50 period moving average. I think we need to recapture the 50 period moving average, and I've been saying that. Until we do, I still don't believe this breakout, and it's just a personal opinion. I still think we can head lower. So we might have broken out, but we might fade a little bit lower into 1900 again. We'll see what takes place. And then we have silver here, an ascending triangle, but it was coming from a big bear pull. And we had a big just indecision doji candle here too as well. I'm not going to believe silver until we start cracking and holding above the 50 period moving average. And as I see it right now, yeah, the RSI is, showing some strength above 50 and is kind of just moving up. And we had a nice big day the previous day. The MACD just turned, a bullish crossover, but it's still below zero. So it looks good, but it doesn't look super strong right here at this particular point in time. So in my opinion, I'm not trading silver right now. I'm not trading gold. If I were to trade silver, it'd be to the short side right now, just because of this big pullback. We're still below the 50 and we're at the top end of this range. So if I was short-term trading, this looks like a short to me over a long position, technically speaking. All right, everybody, that is all I have for you today on the whole market recap. It should be a market recap, not a market brief. Unless you're watching in the morning, then I guess it is a market brief. Thanks for the feedback on the previous video, letting me know what time works best for you guys. Doing them at nighttime is totally easy for me. It just takes a little bit longer than I want to have these end-of-day charts actually update. So I think what I'm going to do is I'm going to start structuring the video so it's a lot easier to kind of flow through it every single day, and then it has more of a framework that you guys can follow. So I might break it up into 4 or 5 sections, indices, then sectors, then indicators, and then commodities or currencies, something like that, where it just has a nice flow to it. And then, it's a little bit less, I guess, mental capacity that I have to use in order to put it together once I have a structure in place. So thanks, everybody. I will see you back here tomorrow. Have a good day.